Welcome back, everyone. Next up, we have Cerrado Gold. It's a Toronto-based gold production, development, and exploration company focused on gold projects in South America. The company is the 100% owner of the producing Minera Don Nicolas and Las Calandrias mine in Santa Cruz province in Argentina, where it continues to grow production and lower costs. It also has the highly prospective Monte do Carmo development project in Tocantins State, Brazil, with a bankable feasibility study expected before the month's end and rapidly advancing towards construction in late fall of this year. Let's welcome the VP of Investor Relations, Mike McAllister. Nice to see you, Mike.
Thank you. Thank you for having me. And thank you, everybody, for taking the time to listen to the presentation today. So as mentioned, Cerrado Gold is a growing producer. We have a producing asset in Argentina. We have a development asset in Brazil, which is an excellent project, and I'll discuss that more as we go forward. But again, the one thing I always like to present to this is that we have very large land packages, and these are still, although we're putting them into production and have good economics, we still see a lot of upside from further potential resource growth and mine life extension. So we're quite excited about that. I do seek safe harbor, and I will be making some forward-looking statements. So just from an investment highlight perspective, as I mentioned, we have two discovery stage assets poised for growth. We have the Monte de Carmo asset, which is located in Brazil. And that's kind of our flagship asset in the sense of growth and economics. We have 30 kilometers of known mineralized trends on this property, and only one area called Serra Alta is the area where we have the 1.3 million ounces defined so far, and that we're basing the feasibility study on. So there's still a lot of opportunity for further growth as we move forward, and from an exploration perspective, and we're expecting production here in mid-2025. The second asset we have is the Minera Don Nicolas project, which is located in the Santa Cruz province of Argentina, in a very well-known Deseado Massif area. We have some great neighbors there. We have Pan American, which used to be the Yamana asset. We have Anglo. We have Newmont. So some very large mines around us in a very prolific area that continues to grow. And so we're rapidly growing production at this asset. We were at about 53,000 ounces last year. This year, we're bringing in, and we already have brought on our first heap leach. We've had our first gold pour there, which is Las Calandrias. And so that's going to bring our production for this year up to about 65 to 70,000 ounces. And we will be bringing on one other heap leach pad, start construction late this year. That'll come online early next year, and that's going to help to bring our production at that mine to about 90,000 ounces. And again, this is an early stage asset. We purchased this from somebody else, and it was an underperforming asset. We've turned it around. We've lowered costs. And again, we still see an excellent upside for further resource growth potential on this project. So again, overall as a company, we have an excellent growth production profile amongst the juniors. We're looking at about 300% organic growth over the next 4 years as we grow from about 50,000 ounces of gold production just in Argentina to closer to 200,000 ounces coming from both our Argentinian and Brazil assets. And so, near-term value, we're growing production and we continue to reduce costs. And I'll show you on a chart coming up that we're actually one of the lowest cost producers in Argentina at the moment. We do have a bankable feasibility study, which is expected before the end of the month, as mentioned. And we do expect construction to commence in the last part of this year, the last quarter. And we're looking for, as I mentioned, production to come in probably the second quarter of 2025 as we move forward. So we're very excited about that. We're also aggressively exploring, and we're trading at a significant discount to our peers, which I'll show you. And finally, as a junior company, it's often the management team that can make or break the project. We have an excellent team in place here, and I'll have a little bit more about them, but they've built several other projects in South America, including Largo Resources, as well as the Jacobina mine, which was sold to Yamana, and then Pan American, which is still one of their best producing assets. And so the team that's in place has great relationships in country, as well as they're the right team to move this project forward. So just as our recap of our first mine, Monte de Carmo, as I mentioned, we have a very large land package, 82,000 hectares, located in Brazil. Right now, we have a resource of about 1.3 million ounces in M&I and inferred. As part of the feasibility study that's coming in, we've done a significant amount of infill drilling, and we'll be releasing an updated 43-101, which will see a good portion of that converted into the M&I and a good portion also brought into the reserve category. And so as part of our PEA, and we're going to see updated economics coming on this, we had an IRR of 95%, which was crazy, and 617 million NPV. Obviously, as we continue to advance the projects, close the drilling spacing, the IRR is going to come down a bit, and the NPV may not be quite as high, but still, we're looking at a long-term producer here that's going to have all-in sustaining costs of around $700 an ounce, which is still going to make it one of the lowest cost producers in the area and in the world for that matter. And so, we're going to be looking at about 100,000 ounces of production on that, estimate. And so again, as the feasibility study will be coming out before the end of the month, and I strongly encourage you to watch for that. Our second mine is the Minera Don Nicolas asset. That's located in Argentina. We have over 333,000 hectares of land here. And so just to give a comprehensive size of what that is, that's about the size of Rhode Island, the state of Rhode Island in the US. And so very large land package. As you can see, it's located to the right of the screen there. Now, again, we have some excellent neighbors. We have Cerro Moro, which is Pan-American, Cerro Vanguardia, which is Anglo, and up further to the north, we have Cerro Negro, which is Newmont. Some very good neighbors. But yet again, we have the largest land package. We have about 5-year mine life on this property. We saw about 44,000 ounces of production in 2021. In 2022, we saw 53,000 ounces. This year, we're looking for 65 to 70,000 ounces, going to towards 90,000 ounces next year. You'll see in the chart on the bottom right there, we're the lowest on an all-in sustaining cost. That's everything in. We're the lowest cost producer compared to our peers. So that's compared to Newmont, Anglo, Barrick, as well as Fortuna. So in terms of gold costs in the country, we're the lowest cost producer, and that's without the help of the heap leach projects, which are expected to come in at costs sub $1,000. So that's just going to continue to lower our costs, and we do expect to exit the year at sub $1,000 gold costs on this property. So looking here, looking at this chart, you can see we have one of the strongest growth profiles out there. We're looking at about 300% production growth and are seeing our all-in sustaining costs continue to drop. Up until 2024, it's just production out of Argentina. But starting in 2025, as mentioned, we're going to see the Serra Alta deposit at Monte de Carmo come online. And we're going to continue to, we'll have, probably about 3/4 of a year, the first year, going to a full year of production in 2026. But we're going to continue to see excellent cash flow coming from here. We'll probably have about 45 million of cash flow from Argentina, and looking probably at about another 100 to 120 coming out of Brazil. And so again, very excellent growth profile. And given that profile, we're actually, you'll see on the next page, quite undervalued. You can see here, if you look at us compared to on a, price to NAV on a junior developer or a junior producer, we put both of them there. On a developer, it's 0.39 times. We're trading at 0.17. On a junior producer, because we have production in Argentina, we're trading at 0.17, and the average is 0.56. So, but yet if you look at us on a NAV per share breakdown, you can see that, we're at 5.48. And, so the implied, we're way above the implied fair value. And also on a production growth profile, you can see amongst our peers, we're quite near the top. So we have excellent production growth profile. We got costs that are coming down and going to be one of the lowest cost producers. And so we feel that we're undervalued and have a lot of opportunity for growth in the share price. Again, as I mentioned, teams are often what build and make mines. We have an excellent team in country. They took the Jacobina mine. It was a $10 million market cap at one point. They sold it to Yamana 4 years later for just under $600 million, 25-time return for the shareholders. And that was still one of Yamana's best producing assets. And I imagine for Pan American, it's the same. The team also then went and built the Largo Resource vanadium mine. in Brazil. Again, they took this from a grassroots project in the ground, brought it through the resource, the feasibility PEAs, and up into production. And so that had about $1 billion market cap at the time Mark Brennan, our CEO, had left the company. And again, that's still one of the highest grade vanadium projects in the world. And it's probably the market cap has come down a bit based on vanadium pricing. However, it's an excellent project. And so the Kurt mentioned, Mark Brennan, Robert Campbell, Casper Gronwald, all are excellent operators. They're mine builders. They've worked in country. They have great relationships. So it's the right team to bring this project forward. Just looking at the company overview, right now the stock price is trading at about 84 cents Canadian. 52-week is 67 to 163. So there's not a lot of downside on the price, given the news flow and the growth that's coming from the feasibility, construction, and going into production. We have about 97 million shares outstanding, about 110 fully diluted. Market cap today is sitting at about just over $80 million Canadian. At the end of the first quarter, we had $21 million in cash, including $5 million in restricted cash. That's set aside. When we purchased the project in Argentina, we paid $45 million for it. We paid $15 million up front. We paid a $10 million payment in March 2022. We have 2 more payments in March of 24 and March of 26 of $10 million. And that's where that $5 million is being set aside and money added to it every month from the cash flow to make those next payments. In terms of the shareholder registration, management has skin in the game. They own about 25% of the stock on a basic level. If you look at it from a fully diluted level, they own closer to 29%. We also have Franklin Advisors that are owned about 4%, Quantax AG about 2%, and then we have a free float of 69%. That's probably closer to 55 because we do have some friends and family and shares in very strong hands that would not likely go anywhere anytime soon. So, but we still have a healthy float in the public market. In terms of analyst coverage, we have Haywood and Red Cloud that are covering us. Both have target price well in excess of where our share price is trading at today, and very healthy NAV per share. So you can see again from their perspective, we are continued to be undervalued. Just taking a little bit deeper dive into Cerrado Gold, the Monte de Carmo project. One of the things I like to mention is the Tocantins state where we're going to be building this project is a very rich agricultural scale and state. They have a very large farms and they have a lot of plants where they're building, producing corn oil, palm oil. And so one of the things that we're excited about here is that the infrastructure in place is fantastic. We have, there's grid power, which is supported by hydropower, and we have as well the population of Palmas, which is about 300,000. That's only about 45 kilometers away from the site. There are some other existing mines in the state, Arias and Alma. One of the things that works to our benefit is Tocantins has the ability to grant the mining permits at the state level. They don't have to go to the federal level to get those permits. And we've had our permits granted on a very rapid basis. And we've, we see no further issues. We had the initial mining permit was granted about a month ago, and then our construction permit is expected in the fall. And again, it's moving at a very rapid pace. The project is well supported by the locals. They want to see this built. In terms of the infrastructure at site, which is key to keeping your costs down when building a project, we have a high voltage power running right through the property. We have pay roads 2 kilometers from site. The major state highway, which runs through the entire state, is 5 kilometers from site. And we're 40 minutes from Porto National, which is a population of about 300,000. So it's, and then also we have water access as well, ample water access from an estuary from the Tocantins River. And we can also collect rainwater in large areas that we can also use in site. And so, again, we don't have any issues from water, power, infrastructure, and so we're quite excited about the state and where we're building. So just looking at the timeline to production, as I mentioned, we'll be updating on the second line. The 43-101 and the feasibility study are expected out by the end of July. Again, we're quite excited about that. It's going to have still excellent economics. It may be a little bit lower on the IRR and NPV, but at the same time, we still expect this to be one of the lowest cost producers in South America and in the world for that matter. Project financing, we have already announced an agreement with the UK Export Credit Agency for about $190 million backed. And so what this provides is if we agree to source about 40% of goods, materials, consultants, or services from the UK or from UK headquartered companies, they'll back this financing with the banks, resulting in a much cheaper cost for the project finance. And so we're estimating that this project will be financed 70% debt, 30% equity. So this basically covers up to 190 million. We don't expect the NPV to be that high. What it does is it also includes potential further growth in the future for things like solar, maybe potentially bringing the fleet of equipment in-house versus leasing. So it just gives some extra room in that sense. And, we're very comfortable with this. And so we do expect to see a term sheet announced later this summer, and we could have the financing in place from the debt perspective by the end of the year. Also on the equity side, we have 30% equity. We have Sprott Streaming, who already gave us $20 million for a 2.25% royalty on the project. We have the ability to buy half that royalty back for about $12 million. In the first couple of years of production. With the cash flow, we will likely do that. But they've also shown interest for coming in for another 40 to 60 million. So we could see the equity component on this remain quite low. And so that works to the benefit of the shareholders in terms of minimizing dilution. As I mentioned, management owns 25%, so they're very aligned with the shareholders in terms of minimizing dilution and seeking the best return on value for shareholders. We received our preliminary license, as I mentioned already. That includes all the environmental work. We've now submitted our construction license, and we do expect to have that in the likely in the third quarter. And we would be starting construction late Q3 or in early Q4. And we're looking at about a 14-month construction period. So we would see construction starting at the end of Q1 and reaching commercial production in Q2 of 25. So we're very excited. It's a relatively short timeline to production for a mine. This is just an overview of the mine site. So you can see on the left, the orange outlines our entire property boundaries. Most of the work we're doing is in the upper portion of that. So you see the dotted black lines, and that represents the mineralized trends, over 30 kilometers of mineralized trends we have on the property. And as I mentioned, it's quite a large land package, about 82,000 hectares. We have 1.3 million ounces defined in an area called Serra Alta, which is a blow up on the right of the map. And that's on less than 1,000 hectares. All the gray and white areas are all the Garimpero or Conquistador from the Portuguese time workings, which have been very indicative of where we should be drilling. And we've had a lot of drill success in this area. And so, as I mentioned, again, this is an earlier stage from an exploration perspective project. The image on the right, you can see the black area is Serra Alta. That's where we're developing and has the 1.3 million ounces. But you can see all of the other targets as well. We have a hierarchy of what's economic. And so the bottom ones are, typically trenching and, some rock samples. And as you get up to the top, Serra Alta and Gogo are resources that would be mined as part of the next upcoming 43-101. But we have a variety of targets, a very large land package, and we're going to continue to drill on this. So while, we could foresee an 8 to 10 year mine life on this, there's no reason that this cannot continue to grow and expand. Again, with the three things that we look for to have success here are, you'll see in the image up on the top here, you have granite hosted, which is the dotted red line, and you can see we have significant amount of that. Next is the shear zones, which are the black lines you see in that image on the left. And then looking to the image on the right, it's the proximity to felsic volcanics. So in the bottom, you see the granite in the pink. Up on top, you see the felsic volcanics. And where those two meet is typically where we find the gold. And so we have, as I mentioned, 30 kilometers of these type of contacts. And so while we're working on 1 kilometer so far, there's no reason why we can't continue to have success. One of the things that happened when we came to the project, Serra Alta on the left here only had about 6,000 meters of drilling. We continued to drill about another 40 to 50,000 meters on it to delineate 1.3 million ounces. We've since done about another 30,000 meters drilling of infill drilling to move this into the reserve categories and increase the level of confidence. But as you can see, we have multiple other targets here with limited drilling. The most one has is Gogo de Onca, which is just under 7,000 meters. But we expect to continue to drill a significant amount. We're doing about 25,000 meters this year. But as part of the project financing, we do expect to include some significant money to drill off the property, and we should see further resource growth and mine life extensions on the property. Our next project is Minera Don Nicolas. As I mentioned, this is in an area called Cerrado Massif, which is a similar gold camp to the Nevada gold camp. Whereas Nevada has been mined since the 1860s, the discoveries started to happen in the 90s here in the Cerrado Massif. And so we believe that this is a very large land package. It has the same ability. As you can see, our project, again, has some very good neighbors, and we're right up against the Michelle project for Cerro Vanguardia, as well as Cerro Moro for Pan American, and we're close to Cerro Negro, which is the former Goldcorp, now Newmont property. So very large land package here. We have had interest from our neighbors. We weren't ready to sell at that point because we have some work. We think this property still can be turned around and improved. By the end of this year, this project should be in a position with a larger resource, lowered costs, and increased production. Whereas if we were to be approached by somebody, we could potentially look at doing something with this project. However, even if that doesn't happen, this offers a substantial amount of growth. This project is self-financing, it's cash flowing, and it pays for its own growth right now, and so it does not costing us anything at the corporate level. This project is a gem, and it's like a wait and see. So we'll either see production continue to grow, or this could potentially be sold off in the future at a premium. And so there's still a lot of opportunity, and that premium would likely be larger than the market cap of the company. One of the things we like to point out here is we're still in the very early stages. The black represents the underground mining, which we're just starting at, and we're waiting for our permit, but we do expect that in October. The gold is the open pit resources where we've been mining already. And as I mentioned, the gray is the heap leach. And we just brought a heap leach project on, which is expected to produce between 20 and 25,000 ounces on an annual basis. We'll be bringing a second one on, which will be between 15 and 20,000 ounces. So we're looking for production at this project to go to 90,000 ounces next year. It'll be 65 to 70 this year. However, most of these gold projects, it's once they went underneath ground when they started to have significant success. Also, we're relatively early to the game. Some of these other projects have been around since 2000. This just started getting developed in 2020. And so with further drilling, we're very confident that we're going to have similar success to our neighbors. The next thing I like to point out, again, this is just the growth profile. So in 2020, we took it from 22,000 ounces when we bought it. We brought it up, and the gold line represents the cost. So we brought it up to 48,000 ounces in 2021. You can see the cost came down. We're at 54,000 ounces in 2023. And you can see in Q1 here, we were the lowest cost producer in Argentina versus all our peers, including Newmont, Pan American, Fortuna, Anglo Gold, Barrick, as well as Hochschild. So, we're going the right way, and we do expect to see our costs come sub 1,000 in country. It's a hub and spoke model. So the central mill is here. We're mining open pits at Paloma. Calandrias is the area where we just developed the heap leach pad. We had our first gold pour in July of this year, and that's expected to add another 20 to 25. The Martinetas will come online. We'll start construction late this year. First gold pour is expected probably Q2 of next year. And both of these have costs that are, this is about 800 or 900. And again, because of the closeness to the mill, this is probably going to be even lower than that. So that's going to help to bring our overall costs on the project down. The previous operator didn't look anywhere below the open pit, but all of the zones continue below ground. We're able to start drilling and accessing that right from the bottom of the open pit. So we're hoping to have that come online in October of this year. Some of the grades that were mined in this open pit were 9 to 10 grams, and they continue below ground. So we do have a lot of opportunity here to continue to grow, the mine life, and to see a resource expansion. Again, we have a very large project here. We have the Paloma area, the Microandes and Martinetas area. And it's hard to see on this map, but you'll see those white outlines on the map on the left, which represent multiple other targets on the property. And, we believe that with further drilling, we can see significant resource expansion on this property. And again, just to recap, before we can go to a Q&A is, why do we believe we're a good opportunity? we have two assets. One is a production asset, which is growing production and lowering costs, which is the Minera Don Nicolas project in Argentina. We also have Monte de Carmo, which is going into production, had excellent PEA. We expect the feasibility by the end of the month. We have the project financing well underway on this. We have an agreement with UK's Export Credit Agency. We expect to see a term sheet with the banks by the end of the summer. And then we'll be looking for our construction permits and are going to construction by the end of the year. And so things are advancing on this project. And we do expect to be one of the lower cost producers in South America and in the world, for that matter, on an all-in sustaining basis. We have a strong production profile for growth. We're looking at about 300% growth, and we continue to drop our costs on it for the entire company to about that $800 level. We have near-term value creation in the sense that we're growing production, dropping costs in Argentina, as well as we're doing a bankable feasibility and construction to commence in the fourth quarter of this year in Brazil. And so we have also, as I mentioned, these are discovery stage assets. We have aggressive exploration programs, two highly prospective underexplored regions, and we're trading at a significant discount to our peers. And we also have a management team that has a good track record, that has done this before. And, we've continued to improve the asset in Argentina. Despite having acquired it during COVID, we still managed to drop costs, improve production. And so I think there's a bright future for both of these assets as we move forward. With that, I'll turn it back to our host and open up for questions if there are any.
Great job, Mike. We do have some questions for you. Okay, let's start with talking about some of the upcoming deliverables, which should help to increase the share price. Can you speak on that?
Sure. So in terms of deliverables, as I mentioned, we just announced the one, which is the project finance agreement with the UK Export Credit Agency. So that provides not only the funding, but they'll cover the interest costs on the loan, the insurance during construction. We do expect to see a term sheet with the bank to lock that down by the end of the summer. So that'll take care of 70% of the project financing. We do expect also to see a potential further stream increase that we'll likely be able to buy back half of. We'll make sure we structure that so it's friendly to shareholders. But again, that would take another large portion of the equity. So we, the last portion later this year would be the equity portion. But in terms of the project moving ahead, the financing is in place. We have our initial construction permit already. We'll see our construction permit come in the fall of this year. And then finally, we have our feasibility coming in the next week or so, which will, again, show the excellent economics for the project, as well as the, to further de-risk the project as we go towards construction. So overall, we still think there's several key deliverables coming this year that should provide for further growth in the share price.
And you also recently press released that the company had signed an agreement with the UK Export Credit Agency to support the project financing at Monte de Carmo in Brazil. So what does this mean for the project financing, and what will it provide for the company?
Yeah, so as we mentioned this before, but what it will provide is, so the UK Export Credit Agency, we had 6 different agencies from around the world, 4 were compliant bid on this. We ended up going with the UK because they have the most favorable terms. What they ask is for 40% of your equipment, materials, like services, consulting, whatever you use, come from UK companies. And they don't have to be, they could be UK headquartered companies that have operations anywhere in the world, including South America. And what they do is they'll back the funding through a bank at a much lower interest rate than we would see if we went directly to some of the banks or private equity lenders. So much more friendly to shareholders. It would provide a longer payback period, even though the economics on the project show a very short payback period. And it also offers support for further project growth down the road. And so, we're very excited about working with them. We don't think it's going to be any issue to meet the 40% criteria. We could likely even go higher from there. But what it does do is provide definite de-risking of the debt financing of the company.
Peyton Gross asks, what majors are producing around your projects, and do you know in what volumes?
So as I mentioned, producing right now in Argentina. I don't have the exact volumes in front of me. As I mentioned previously, I'll just go back to that one slide. So these are so close to our project in Argentina. We have Cerro Negro from Newmont. We have Cerro Moro from Pan American, and we have the other one that's closer to us is the Cerro Vanguardia, which is Anglo Gold. And so their production rates are significantly higher than ours. They're probably producing somewhere on an annual basis closer to, I would say, 150 to 200,000 ounces. But they're larger projects. They've been around since the early 20s, whereas we're still relatively new to the game. So while they're producing at higher levels, you can see that their costs are higher. We've got the lowest cost production in the first quarter in Argentina. And, given which speaks to not only the ability to find resources and higher grade resources, but to continue to source out potential heap leach targets, for example, to process the lower grade materials, which are at very low cost. And so, we're very excited about that.
Russ wants you to clarify, you have 18 million in cash, is that correct? And does that get you through net cash flow positive?
So we have 20 million in cash. 5 million is earmarked for prepayment of the project acquisition of Minera Don Nicolas. So that was at the end of the first quarter. We'll be updating our second quarter numbers shortly, but we have ample cash to get us through most of the big ticket items in terms of feasibility and other project spending has already been completed. So we have ample cash to bring us through to the project financing, which we expect later this year or latest early next year. But we're set. We don't need to go back to the market right now.
And Brian asks, how are you keeping the production costs so low because cost of equipment's going up? Is it the labor? And do you see your production costs moving higher?
Yeah, so one of the things that works for us on a benefit perspective is the exchange ratio. So in Argentina and Brazil, we have a variable favorable exchange rate to the US. I think it's 5-1, the real in Brazil. Right now, and so the labor rates is a huge part of it for us. One of the second reasons the costs are so low in terms of the production in Brazil is it's nothing we've done. We're just very fortunate. The gold is it's non-refractory. It's very clean, and so when we take the gold out of the ground, just from crushing it and running it through a cyclone, we already recover 75 to 80% of the gold without even sending it to a CIL plant. So we're able to take a much smaller CIL plant, one that comes off the shelf. We don't need to do any significant modification. We're going to use a lot less cyanide, and so the input costs are much lower as well. The other thing is just the input costs in terms of electricity, labor are just much lower where we're operating, so that benefits us.
Perfect. Well, thank you so much, Mike. We're so happy to have you back, and we'd love to see you again with some updates.
Great. Thanks for having me.
All right, everyone. We'll be right back with our next presenter.